Welcome to Markets Now. I'm Michelle Rook with Don Rose of U.S. Commodities. Grains ending higher in corn and soybeans, lower in the wheat market, as well as cattle, and then kind of a mixed day in the hogs on Tuesday. Don, let's talk about corn and soybeans because we've had several down days. Finally seeing a little bit of a pop. Was it just short covering, or was there something else fundamentally pushing it like weather?
Well, I think when you look at the funds have been pressing the short side of the market. As we know, wheat really aggressively, corn more recently, and to a lesser degree in the soybean market. But I think it's just that time frame, Michelle, where we've taken enough risk premium out of the market. We're going to measure here and see what happens with the weather going forward, see if we get some positive talks on some of the tariff and the demand side of the market. So I think it's just, often as you hit the middle of June to the 1st of July, just after 4th of July, you can get some weather pattern changes. And I think, we do have this high pressure system out to the far west that I think we're watching pretty close.
So we could be looking forward towards maybe a hotter, drier forecast coming up, right?
Very possible. And I think, we all, in the olden days, we always said oats knows. Well, the oats market has rallied 50 cents here in about 2 weeks. And some of that strength is just on the concern with the spring or in the Canadian prairies. And, and the oats are the first one up to bat with the harvest after a hard red winter wheat.
All right, if this weather situation develops that you alluded to, and we turn hot and dry, with the funds so short in both corn as well as in the 3 wheat complexes, how much of a rally could it actually produce?
Well, you're exactly right. This time of year is the one that this weather is a great equalizer. It can turn on you pretty fast. Of course, it can be the other side of the coin too. But remember, it wouldn't be impossible. We've got some history that says that the February highs are taken out most years in corn. So that's 480 on the upside. Now, I think a lot of producers would be pretty happy if we get some kind of retracement back up to that 460 to 470 area, but not impossible, Michelle. With weather problems, you can change this balance table very fast. Remember the corn carryout's only 1.8 billion. I mean, that can go pretty fast to the downside, and soybeans under 300 million. So it doesn't take a lot of imagination. If you start to lose yield, we're off to a good start now that things can change.
Right. We have still seen the bear spreads working, though, in the corn market. There's been a lot of discussion about that. What's the pressure been a function of? Is it just because of South America's crop that's starting to come to market?
Yeah, I think, we're basically in a world market, is the problem. And it's a fragile world market, as we know right now, from a trade standpoint. Then on top of that, you have some big harvest going on in Argentina. They're probably 60% harvested. Brazil's probably 2% harvested. So those enter the pipeline. Remember, we export about 2.5 billion bushels of corn. Well, between Argentina and Brazil, they export more than that. So competition is here. On top of that, they're about 10, 15 cents cheaper than we are. So it's an issue, but of course the dollar will have something to say about that also. But competition from South America, I think, is an anchor, always is this time of year.
Yeah, obviously they're cheaper than us already, and you continue to see the Brazilian corn crop projections push higher and higher, don't you?
Well, you're exactly right. In fact, not just a little bit higher. I mean, there's some of them that are as much as 200, 250 million bushels higher than the government is carrying on the books. So we're going to find out. The combine will give us the tail of the tape, but their weather's been favorable, so it's very believable that their production after last year's short crop bounces back, which would make sense.
Did soybeans get any support from maybe some trade hopes with China, as President Xi and President Trump are supposed to be meeting soon?
Well, I think most definitely. I think it's just one of those that, we have a lot of the negative news already dialed in, from those talks going slow. And I think the hope is that if the two presidents get together and talk, that they're going to be pretty serious and see if they can at least run into something that works for both sides on trade, Michelle.
Gotcha. Wheat market set back here today. We did have a little bit better crop ratings. Was that part of it, or was this just harvest pressure starting?
Well, we have about 3% of the wheat harvested now, hard red winter wheat down in Oklahoma. That'll be into the big wheat state of Kansas here in a couple of weeks. But, that's an anchor. But at the same time, I think a positive thing is we're watching this Canadian spring wheat area very close, like we said with oats also. They've got a drier pattern. So we'll see if that turns into anything. So it's the harvest pressure, plus we're pretty low here. Of course, hard to beat Russia. They just continue to clear their stocks at just very low levels, cheapest in the world, which is an issue for everybody that has wheat around the world. But I think you're just down at value, Michelle, and how much of this wheat goes into feed rations is going to be the next thing at these price levels.
Don, let's talk about the cattle market. On Tuesday, it got just shy in the live cattle of some of these recent contract highs and then reversed. How much of a concern is that from a technical standpoint? And why are we continuing to see such disconnect with the cash market?
Well, you're right about one thing. We have a huge disconnect. The technicals are negative. The fundamentals remain positive. Remember, we still have those big key reversals in the cattle market, feeder cattle. Those are signs of either a major top or a major intermediate top. We've marched along into a seasonal time frame where the cattle market typically tops out on the cash. So it's starting to make more sense that those key reversals, if you don't take them out here in short order and the cash market tops out, that we put in the top. It's not impossible, Michelle, to talk about that we might have a multi-year top in place, but let's see how it goes. The cash market is going to be key this week. Futures market with the basis levels as tight as it is, pretty hard to break too much on the futures unless the cash does. So I think this week's going to be big, and also what the demand does on the box beef so far, that's been holding pretty decent, and the packers been willing to eat the losses. So as a consumer eats the beef.
Yeah, you get up at these levels though, and you get folks that are a bit nervous about being this high. And then you get rumors like last week with the New World screwworm, this week or even today talk about plant closures. But we've already seen the packers slow down that chain speed, haven't we?
Yeah, the packer he's cut the hours and he's also cut some of the Saturday kills. So, the Packers, he does this because the Packers in control. It's just that the consumer's been aggressively consuming. But what the Packer does is he tries to back up cattle. He tries to slow things down. He tries to put more weight on the cattle so he gets better control of rather than having to fly and pay up aggressively on cattle. So that's what he's trying to do. Usually, I would say most of the time, my experience says as we get into the summer, he'll get the advantage at some point in time. And typically, remember, we do drop pretty significantly from the spring top, if that was this week, next week, to the summer lows. So you're just ahead of us on both the box beef and also on the cash cattle side, Michelle.
Talk today about a plant closure. Would it surprise you to see that in this kind of a economic environment in the cattle market, Don?
Well, that's often what happens. At some point in time, somebody just kind of gives up and says, I can only, what's the Packers been killing cattle at $100 to $150, $175 a head loss for week after week, month after month. So I think eventually it takes the toll. And particularly when you look at it, you go into a time frame where you've got other packing plants trying to come on board. So to close down, I think that's probably what happens as we go forward with some of this downtime.
And the hogs, a mixed market there with some bear spreading. So some pressure in the nearbys. Is the futures market just getting too far ahead of the cash, and so we're waiting for it to catch up?
Well, the hogs, much like the cattle market, the funds just continue to pile into the hog market. Now, seasonally, that makes sense because remember, the hogs usually go up into the summer. The belly market usually rallies 40, 50%, which it's doing, and that pushes the cutout up. That puts the cash market up. But, we usually try to stall out, around this 100, 105 in the summer months unless there's something unusual. But as far as the June contract, you're right. We're sitting around this index 96, the June futures around 100. So, we were just, the battleground is there. Hard for the June to go up until the cash goes up a little bit more. There is that gap, 105.17 on June, but the clock is ticking in, Michelle, right now.
All right. Thanks so much, Don Roose, U.S. Commodities. That is Markets Now.